This should be better, maybe. Should be better. We'll see. I'm gonna wait for people to hop on. Give me a thumbs up, and then we'll start. That's just ridiculous. Every time, folks. Every single time. Is it better? Jesus Christ. I don't know why I pay for Streamlabs, man. Every single time there's an issue. All right. I just restarted the program and it works now. Let me go ahead and I need to send this URL to our chat really quick. Give me 1 second and we'll go ahead and get started. How embarrassing. What is even going on? Okay, new link. All right, let's go ahead and get started here. What's in the past is in the past. Long story short, we hold our trades longer than most people because we ride the trends. Following POP framework, trend, relative strength, and momentum. Let's get into them. Okay, by the way, if you end up joining TTI, you're going to be able to learn all of this. It's all there. We have an introductory course along with a bunch of other educational material. I encourage you, if you end up joining TTI, to go through these 4 videos. If you go through the 4 videos, not only are you going to understand how we come up with the things that we do, but you'll be able to do it by yourself and take the trades with us with more conviction. Let's go ahead and get started here. So these trades are not necessarily in order of date or relevance. These are just names that automatically stood out to me. The way we're going to do this is I'm going to show you the first chart right when we took it. This is the actual look when we took the chart. We're going to kind of deconstruct this. You're going to look at the actual trade alert as it went out. Look at the stops, the take profits, the entries, the options contracts, the reasoning behind at the time. And then we're going to look at how it progressed. We're going to talk through how we sold doubles, took profits. And then we're going to obviously have the receipt at the end to show you that hopefully we made a couple bucks, right? So if you have any questions about a specific trade, feel free to ask them in chat. I'm watching and I will be able to answer those while we're going through this. Okay, so the first one's on Kinross Gold Corp. We opened this up back in January of 2025, and I want you to take a step back, and I want you to think about, the market back in early 2025. We were just coming out of kind of this lull of the end of 2024. I believe Santa Claus rally did not hit. There was kind of this ominous feeling, and this was right around that DeepSeek stuff. If you were long tech, particularly semiconductors, the DeepSeek news came out, really spooked the market. This is kind of the backdrop of these gold miners breaking out. Now, inside of TTI, we focus on sector and industry first, and then we go and we plug the individual stock we want to trade that will best allow us to capture that sector and industry trend and make a bunch of money because they're a higher beta trading vehicle. So Kinross kind of fit that description. We think about trend. So Kinross trending higher above an upward sloping 200-day moving average. We think of relative strength. KGC, Kinross, outperforming its industry group. We knew we wanted to be long. Gold miners, we went and we did the homework and found which gold miners were outperforming, and KGC was one of those. So new highs on a relative basis matched with new highs on an absolute basis. And then from a momentum standpoint, riding momentum higher. Momentum is super important for us inside of TTI, folks. It's like owning a Porsche and not having any goddamn fuel in it. You need gas in the car for it to go. The worst thing you could do is be stuck in a trading vehicle that doesn't move. Right idea, wrong trading vehicle. That sucks. Throwing momentum as part of your prereq is a good way to get around that. So KGC, you can see it's a very kind of easily identifiable breakout. It's a stage 1 into a massive potential stage 2 breakout. And obviously we took it. So here was the trade alert as it went out, January 29th, 2025. This is the format when we send out these trade ideas. We email these out. You can get them in our app. You can get them via your phone. But we give all the pertinent information, sector, market cap, volatility, the entry, the stops, the take profits, the options contracts, the shares, and then any additional information. So you can kind of see how we broke this down. It's a gold miner. We knew gold miners were breaking out. It was a mid cap, 13.63 billion with a 3.31 ADR, essentially higher beta trading vehicle. Again, we could have just went back and bought GDX calls, but why would we do that when we have a higher beta name within the same industry that's breaking out? That's obviously going to potentially make us more money. Our risk on is above 1075, our risk off below 9, and we had profit targets originally at 16.5 and 26. This is important because inside of TTI, we're focused on 3 things after we put the trade on. Where are we selling the double? Where are we taking the first profit? And where are we taking the second profit? After the second profit, we do something called removing the guardrails. What does that mean? That's where you typically see these huge percentage wins come out of TTI because we say, all right, this trade has already fulfilled, our wildest expectations. Let's take a step back and let's let the trend do the heavy lifting. Let's see how far these things can go. And that's exactly what we did. So something to consider here. We're not a short-term trading group. We do have short-term trades that we put out, but we're more so of a longer-term trading group, right? We like to focus somewhere between 60 to 180 days. But in this instance, we bought essentially an entire year, right? Think about why. Massive base in KGC, massive base in GDX. We thought if this is a breakout that could potentially lead to a new cyclical bull market in this area, we don't want to cap it with weeklies. We don't want to buy a month out. Let's try to capture the whole goddamn thing. And that's exactly what we did. We went out, we bought the January 16th, 2026 $15 calls, folks. 15 at the time. That was around the 0.25 delta. And you can read some of the comments here with the recent breakout in gold. Many gold miners are popping back up on our scans and breaking into new highs. KGC is breaking out on both an absolute basis into 13-year highs and on a relative basis against the broader gold miners industry. That matters, folks. If you want to beat the market, you got to own the things that are beating the market. And in this case, the benchmark is the gold miner industry ETF GDX. And we're going and trying to find the trading vehicle that will outperform that. Riding an upward sloping 200-day moving average and within a bullish momentum regime, we want to grab KGC here if you're lacking gold exposure. Here's what happened. Boom. Now, I want to point out the best trades that we put on do not just stop when the current contract or whatever that we have is done. That's not how we do things in TTI. We can't always add exposure, particularly if you're using options, because listen, options contracts are highly volatile. We're kind of regulated by the Greeks, etc., right? And so we have to play these things intelligently. So when we find opportunities to add exposure, generally through consolidation fractals, we do. And so here we are. This was this morning. KGC is continuing to outperform gold miners, up about 28% off of the breakout against GDX. So we chose the right trading vehicle. We sold the double on tranche 1 a couple of weeks after we opened it. We took profits at the first profit target at the 1.618 fib extension at that 16.5, and then we added another tranche. This is one of the biggest things you can learn from TTI. The trade is not over because you're taking profits. Now, I'll tell you, we do not add into losing trades, but we do add into winning trades only after we take some risk out. So if we sell the double, get in our mind really quick. You have $1,000, you go to the casino. You throw it down on red, roulette. It hits red. What do? You have $2,000 now. What's the smart thing you should do? Take 1,000 of that, put it in your goddamn pocket, and then take the other 1,000 and go have fun. Worst case scenario, you lose nothing and you have a good night. Because you already took the money that you brought into the casino out, back in your pocket. You can now finance the rest of the night for free. And you make a couple extra bucks on that additional $1,000, you just made a lot of money while managing your risk. It's the same thing in trading. When you sell a double in an options contract, you're essentially taking profit at 100%. You close half of it. What does that do? It pulls all of the original money that you put into the trade back into your account. Now what's your max loss on the trade? 0. And maybe a couple fucks. Fuck. God damn it. But other than that, you're not losing any money. And more importantly, you're not losing any hair. The trade becomes incredibly easy to manage when you're not risking any money. Once we sell the double, we look to add in at convenient opportunities. And those convenient opportunities, if you're trading options, are pullbacks and consolidation phases. Why? Well, because options premium gets crushed during consolidation fractals and pullbacks. So what do? We go, listen, trade's working, trending up, hitting our profit targets. We sold the double. Let's add more exposure. And so that's what we did. And then we sold the double on tranche number 2. And then we took profits and added another tranche up here. And guess what? What happened? For some of the guys in TTI, it's already free. We sold the double already. For others, we're almost there. So we're on tranche number 3 of KGC. We started this in January. So instead of going out and hunting for new trades, one of the more efficient ways to do this is to simply add into your winners. But you can't just add into your winners indiscriminately. There has to be a thought process behind it. Always managing risk. So KGC, one of our biggest gold miner trades, and we've had a couple, right? We had OR, we had AEM. Shout out Pat. 1,550% this week in his original KGC position. There's 36 days left. Pat, you're probably in here, so shout out you, brother. But this is what I'm talking about. If you can manage your trade effectively, take double or sell the double, take profits and let the rest ride, you can have these outlandish returns. Now, I think it's important for transparency reasons to say it's not like we're holding a full position. We're not holding a full position and then riding these to 1,500. We're taking profits on the way up. But even if you have a relatively small amount of contracts on the last portion of the trade that you're letting run, those outsized profits pay for a hell of a lot more than you'd expect. A 1,500% move on 5 contracts is worth holding, even if it's not a 15 contract position. Managing risk, all of that extra profit just goes right back into your account. So congrats, Pat. And by the way, KGC is probably going to continue to rip. Okay, so that's the first one. Beautiful, beautiful illustration of managing risk to the upside, taking profits, adding in, etc. Let's talk about one that was a flash in the pan, CoreWeave. Now, I really want to illustrate this trade in particular for 2 reasons. It was a big win, but also, remember what we talked about prior to the fisheye? Find easily identifiable patterns and setups that you can find again and pull inspiration from. This is important for CoreWeave because if you look at CoreWeave from where we entered it to where we originally got out, fantastic trade. Since then, not so much. Don't marry the trade. You're just dating it, right? Once it's over, it's over. There's this horrible, horrible, horrible habit of traders for recency, bias, anchor bias, all these things that come in and go, well, I made a lot of money on CoreWeave. What are we doing with CoreWeave next? Fuck it. It's like, seriously. It's a trading vehicle, folks. We're here to make money. We're not here to be long-term CoreWeave holders. That's not our goal. So here's the trade, right? CoreWeave, here's the chart. And you could probably tell where we originally entered it at 61.5-ish. And here was the trade alert as it went out. We opened it on May 6th of 2025. Now we opened this live on a webinar, so the trade alert looks a little wonky here. But similar setup as ARM, which is what we're going to get into next, which ended up netting over 2,000% in profits. Now here's the CoreWeave chart before we entered it. It was below the original breakout spot. Okay? It's important to understand that. I want to own CoreWeave on a close above 52.5. This is a great shares traded over 13%. I'm a buyer of the June 20th, 2025 $75 calls. This is a short-term trade. Now, if you put yourself back into our brain here, what were we coming out of early May? We had just had a market correction, damn near a new bear market into a bull market from February through April, right? The indexes came down 20%. I think officially SPY came down like 19. The Qs were 22. And we saw NVIDIA lose like 40%. So, I mean, it was a massive correction from February, which was the DeepSeek stuff, into the Trump tariff tantrum. So when we were opening positions in late April or early May, once we started to get more confidence that the market had bottomed, we had this weak breadth thrust, we started going out and pushing more risk into the market, into these more risky setups. IPOs, folks, one of the more risky setups. Can we all agree? We don't have a lot of information going back. There's not a lot of price history. And on top of that, the beta is huge on these things. They're just very, very quick moving vehicles. So again, over 13% ADR, average daily range. That's a very volatile asset. This is another high IV trade that should be priced to go to zero. A very important idea in options trading. You have the ability to price your position to go to zero. Meaning if you don't want to lose more than 1,000% on a trade, what are you going to do? Only risk 1,000%. That's it. Pay 1,000% into the, or $1,000 into the trade. You can't lose more if it goes to zero. That's called risk management. That's basically a stop loss on an options contract. In a perfect world, we'd be able to flip half for free prior to its earnings report, May 28th. Remember, we're looking to sell the doubles here. Okay, so what actually happened in CoreWeave? CoreWeave, we sold the double like 3 days after we opened it. Now, that doesn't always happen. I'll be the first to tell you that when that happens, it's a big deal. We love that. But we're not hunting for these names that immediately move. Remember, we're more of a longer term trading group. A lot of the guys and our clients, gals as well, by the way, our clients are full-time employees, moms and dads that own companies. Like, they can't sit at their computer and monitor every day. So we don't trade things that need to be monitored every single day. That's not our goal. But when it occurs, we're not going to say no. So we originally added down here, sold a double on the actual breakout. And I want you to think about this from a psychological standpoint. We were able to sell the double on the breakout. On a breakout. So everybody else starts looking at CoreWeave. It's breaking out into new highs. It's on everybody's scan. We're already in a free position. This is a Goldilocks environment for what? A grand slam. Let this thing go. Do not try to overmanage this. It's the worst thing you could possibly do here, folks. So we did. We said, let's have our hands off here and let's see just how freaky this thing can get. And it just so happened that it got really freaky. We took profits at the first profit target, we took profits at the second profit target, and then we removed the guardrails. And this thing just continued to fly. Now, we didn't have a whole lot of time on these contracts, and so we did try to take a couple more cracks at this thing. But the original trade itself, we removed the guardrail and rode it as long as we possibly could. Close to expiration as we could. I think it's incredible that Brian, for example, you're going to see him a lot today. So shout out Brian. I don't know if you're watching this. 5,000% damn near on that particular play. Again, it's only one contract, so I'm not going to sit here and tell you that it's worth all this, huge amount of money. It was worth almost $2,000. But this was after selling the double and taking profits twice. You leave a couple runners on. Some people have larger accounts, so that means 10, 20. Some people have smaller accounts, which means 1 or 2, right? And now all of a sudden, you have a 5,000% win on a single contract that is going to net you. Look at how much of the total. One contract. It's insane. These things are, this opportunity that you have to make a lot of money on a relatively small amount of contracts is huge. And it's because you let the trend take control. So remember, we were just talking about how CoreWeave, important trade. Why were we able to buy the CoreWeave trade? Why did we have the confidence to buy it prior to the breakout? Look at this setup. Look at the setup. It's the same setup. ARM Holdings, November 20th, 2023. But it goes beyond just the TA. Technical trading is not just chart patterns, folks. Twitter would like you to believe that. YouTube would like you to believe that, but it's not. There's a million other intangibles beyond just simple chart setups. For example, sector, industry, trend of the entire market. Which market caps are running? Is it risk on or risk off? What's market breadth? All of these things. It's not just chart patterns. So when I tell you to look at ARM and I say look at the chart pattern, that's one thing. But what do you think is more important than the chart setup itself? By the way, for those of you in TTI, this is our IPO-based breakout setup. And you can scan for these, and they're great. What's more important than the actual technical setup? The sector and the industry and the market environment and everything else. Remember, the chart setup is just the vehicle. We need to prep the entire plan before. Go back to CoreWeave really quick. What is this? It's a semi name, right? It's a semiconductor. And it's giving us kind of this IPO base. And what was going on in May? We had just hit a weak breadth thrust. We were throwing risk back into the market. And then I think to myself, wait a minute. I remember ARM. We traded this as a group. Same setup, same sector, same industry, same market cap, same market environment. Remember, folks, 2023, you guys remember what was going on? The market had just come out of a 4-month lull in summer. From July through end of October, the market drew down 10%. And then out of nowhere, on October 31st, AMD, it's crazy. You're in the market long enough, you can remember these very specific data, these days and what's going on. What happened on October 31st? AMD came out with an earnings report. Market fucking rallied like crazy. We go, time to throw some money back in. Over the next couple of days we did. This was in that Goldilocks zone. We opened up ARM. What happened with ARM? It's the same thing, folks. Again, it's the same thing. What do you think we did? We sold the double. We took profits. Now, this is to illustrate the insane move, and we did capture this. We captured it. We also tried to take a couple more cracks at ARM and weren't successful. but it was a very big net positive. And the idea here is that the previous setup that worked happened again, almost perfectly, to a T. So CoreWeave, 5,000% for Brian. Here he is again. Brian's been with us for a long time. Most of our members have, actually, because it works over time. So I think it was one of his first 1,000% winners with us, actually. Okay, so again, repeatable processes, folks, repeatable processes. It starts with sector and trend, goes into the chart pattern, etc. All right. This was one of my favorite trades of the year, AEVA. This is a log, just so everyone's fully aware. There's a log chart, looks a little funky, but it's because I wanted to express how crazy of a drawdown AEVA had been in. For like 4 years, it had drawn down like crazy and then built out this beautiful accumulation base. Fun fact, my nephew, he has interned with me for about 9 months now. Today's his last day. As soon as we're done with this webinar, he passed his test. He's had a very good year in the market. We're going to go celebrate. One of the questions that he had to take in the test yesterday was, what do stage 1 bases or what do accumulation bases mean? What do they represent? You guys know? It's not retail buying this. Retail does not have the buying power to stop a downtrend. It's not our thing, folks. It's financial institutions. It's large money managers. All right? You get these big long bases start to be built out at the bottom of a markdown period. You start to get above an upward sloping 200-day moving average. You can verify it with a little bit of VRVP if it makes you feel any better. You buy the goddamn breakout. You buy it. It's not going to work every time. But these stage 1 bases into stage 2 breakouts are very, very powerful indicators. So that's what we were doing. Here's the setup as we saw it. By the way, look at the massive ADR. Challenging trade from an option standpoint. 16% ADR means you're probably playing with 100 IV contracts. You got to be very careful. If the trade doesn't absolutely rip, you are out. Easy, 0. In our case, though, it did rip. We opened this May 6th. I actually sent this out on the free newsletter. If any of you guys are on the free newsletter, let me know if you remember this from midsummer. This was the trade idea as it went out. Trading above an upward sloping 200-day moving average within a bullish momentum regime and showing relative strength against the broader semiconductor industry group. I am very consistent. Trend, relative strength, and momentum. Any weakness back into the $8 is viable. Price targets of 11 and 17.25. Great shares traded over 10%. It was 16. I'm a buyer of the June 20th, 2025 $10 calls for approximately 60 cents, but not a penny more. High IV trades, so price to go to 0. Again, very consistent with this stuff. You have to know exactly what you're doing if you're willing to put capital. What happened? Boom. Now you can't really tell just how insane this move was because I had to zoom in to get all of the words on there. But look at the price. We bought it around $8. It went all the way up to 39. It's insane. Entered it and sold the double in 2 days. Just like CoreWeave. It was around the same time frame, right? Things just started ripping. So if you're opening up stuff, you got to manage them fast. What I would do for a market environment like that again. Have a summer was a great time to be long shit stocks. And by the way, this was a small cap semiconductor name. It was like 800 million market cap at the time. Got all the way up to like 3 billion or something. So we entered our first tranche, sold within 2 days, the double, took profits, and then we closed it on this big candle down. There's one thing I want to point out here, by the way, something that I don't think enough of you appreciate, and this is very strictly only options. If you are in an options trade and it goes to 105%, say for example, you sell the double, you pull all of your original money back and you get a little bit of extra profit on top. Great. You now have half of the original position in. What happens if that position pulls back? Let's say you were up 105% and then it's down 50%. I deal with this a lot. People will go, shit, man, what a stupid trade. Like, I can't believe I let that thing come all the way back, blah, blah. I go, listen, let's say you close at negative 50% after you sell the double. Why are you looking at that as a loss? It's a win. You already have removed all of the risk from the trade. Anything you pull back from the existing tranche of contracts that you have is pure profit. Now, I'm not telling you to go and celebrate a contract or a trade that goes from 105 to down negative 50, but it happens. We're trading very highly leveraged financial derivatives. It's going to happen. But that one simple trick, little air quotes there, of flipping the negative to a positive, like, hey, you know what, made money, move on, can absolutely influence the way you maneuver through the market in the near future. So we closed on a down day, which is a bad thing to do in an options world. You do not want to close on a down day if you don't have to, because the options contracts get crushed at a way faster rate than the underlying asset. So it was a good trade. We liked it. Then it consolidated for a couple days, started to press back up and over our first real fib level, or second, excuse me. What did we do? We entered again. Sold the double, took profit, and then it fizzled out eventually. Massive wins. I mean, these were huge. And again, here I got the receipts. This is me. 1,100%. Again, not full positioned, but that's not the point. Make money on the way up, manage your risk, ride the trends for as long as you can, leave a small portion on the tail end, watch what happens to your yearly P&L. Let's talk about probably the most hotly contested trade we've made, gold. Now, I'm not going to sit here and bellyache about all of the shit I got in March of 2024 for putting this on. Actually, as a matter of fact, I'm going to give myself a little pat on the back here. This was the original trade we put on in March of 2024. It's almost 2 years ago. That is insane to think about. Almost 2 years ago, we opened up gold for the first time. Now, in hindsight, you would look at this and go, what the fuck was I thinking not buying this? This is one of the easiest goddamn setups you could possibly, find. This is a multi-year base at the top of an uptrend looking to break out again. What's the old adage? The bigger the base, the bigger the breakout. You're staring at a 3-year base, 4-year base in gold. Listen, at the time of opening this, and you can go back and read on Twitter, or you can read my newsletter inbox. When we open this, it goes, essentially, we're in a bull market. And if gold is breaking out, that means the bull market's over. And you need to sell all of your tech stocks and all of your semiconductors. And the AI bubble is done if gold's breaking out. Do you want to know what I thought and respectfully said? Pardon my French. I don't give a fuck. I don't care what you think. This is a 3 to 4 year base breakout. This is the way I view the market. What is happening right now? Gold is breaking out. What can I do about that? I can own it. Why is it breaking out? Don't care. I'll figure that out later. But if I wait for the why, I'm going to miss the breakout. And then by the time somebody that's a lot smarter than me with 100,000 followers on Twitter that wants to talk down to people when they don't agree, by the time they get around to telling you why it's happening, which now we know, inflation, money printing, central banks are buying this shit, people are trying to get off the dollar, now we know the trade's dead. Lesson in there, folks. Buy the goddamn breakout. Worry about the why later. Here was the original trade idea. As it went out, sector and industry, it's gold, folks. Right? We had a risk on above 191, or the risk off below 182.5. Price targets at 215 and 250. March 4th, what did we buy? January of 2025. Why? Again, you're going to buy weeklies or monthlies on something that just based for 4 years? You're doing yourself a disservice. You're probably going to make some money. Are you going to make as much money as the asshole that bought a year out? Probably not. You have to be able to focus on the right expiration for the chart setup you're trying to buy. The breakout took 3 years. Do yourself a service and buy a couple extra months, maybe even a little bit more than that. And that's what we did. I even said this is going to be a duration style play. And we have a little webinar that talks through what a duration style play is. If you're not comfortable owning a trade that could take 9 to 12 months, don't take the trade. And guess what? There are a lot of people that are not comfortable taking a trade that will last 9 to 12 months until you see how much goddamn money you can make. And then all of a sudden, everybody wants to take them. So again, I'm trying to allure to the people that can't trade all day, every day. As a matter of fact, I don't want to talk to those people. Those people are fucking crazy. If you're a day trader or you like intraday trading and that's what you focus on, God bless your soul. I'm not. It's not my game. For those of you that have commitments, go for those 9 to 12 month trades. We want to be long gold above 191, take profits at 215 and 250. We're going out there. What do you think happened? Well, you know what happened now. There it is. I will tell you right now that this is potentially like once every 2 or 3 decades. What we're trading through right now, if you're in TTI or even if you're not, you're in gold, you're in a historical trade that will be looked at and talked about long after we're dead. How cool is it? We are a part of living history. We owned the 193 breakout. And here's the beauty of these trends. Not every trade turns out like this, but this is when we talk about the POP framework and owning things that are outperforming everything else and not being afraid to add more risk into trades that are working. This is what I mean. This will go down as one of the best trades maybe I will ever take in my entire life. Not necessarily from a percentage standpoint, but from an execution standpoint, hands down. And again, I'm going to go out on a limb and tell you I don't know any other community that has been long gold since March of 2024 the entire time and has added exposure into it. I don't know anybody. I've never seen it. And I'm a part of a lot of different subscription groups. Nobody. So we got in March of 2024. We sold the double, took some profits at the predefined profit targets that we just outlined. But here's the thing, added in. What's beautiful about these consolidation fractals, folks, is that, again, if you're trading options, they offer incredible opportunities to add because when price goes sideways, and this is a weekly chart, by the way. So each candlestick's a week. It's not a daily. Sometimes you have to wait like 3-4 months to get a new breakout in gold. What do you think that does to options contracts that just rallied? You can get like 50% off on some incredible deals. Like seriously, like Black Friday every couple of months in the gold area, gold options chain. So think about it. The guy that bought here and the guy that bought here are both right. I'm going to say it again. The guy that bought here and the guy that bought here are both right. What's the difference? This guy might spend $10 per contract. This guy might spend $5 per contract. Who would you rather be? I know who I'd rather be. $5. Give me the discount, baby. We focused on this in TTI. Find the discount on the options chain. I don't know anybody else that talks about that. Nobody. They like the chart. They go and buy it. It's not us. We need to have a discount. So that's what we did. We entered our second tranche, sold the double, consolidated sideways, buy the next tranche on the breakout, sold the double, and then we got a huge rip, by the way. This is when people started to get interested in gold, early 2025, right? The market was melting down. Nobody wanted it in 2024. Tech stocks were still doing okay, or good, I should say, not okay. They're the best. But then all of a sudden, gold started really ripping, and now all of a sudden, it was on everybody's radar, and we were on our third tranche. Rode it all the way up, took profits, and then this was kind of where we were going, is this the end of the gold move? I don't know where the top is, folks. I think one of my superpowers is that I'm unwilling to call a top. I don't know. Like I have a general idea maybe. I know what to look for, but I'm not going to go out on record and say gold's going to top at $400 and risk my reputation. It gets a lot of clicks. You're going to get everybody out there that agrees with you, liking your post and retweeting it. And you're going to get a lot of engagement. But what a stupid fucking way to trade of just saying, I'm selling everything at 400. Like what? What's the difference between 400, 300, or 300, 200? Don't do that. Don't try to time the top. Just ride the trend. So we did. We entered a little early on the fourth tranche. Thought we were going to get the push, and we didn't. We sat for a month in a loss on that trade. Again, happens, particularly within the options world. From an equity standpoint, if you're in a trade and you have a minor loss and it's going sideways, you're more so bored than anything, right? Opportunity cost is real. I get it. But from an option standpoint, you open a trade and then it goes sideways. It's not just opportunity cost you're losing, folks. It's your money. Premiums come down. And so we had to make a difficult decision. What are we going to do? Well, we had this drawn up at the time, little sim triangle. Let's just let it play out. We're in our fourth tranche. If this is the top and we don't, this rolls back over, that's fine. It's been a great trade, fun run. About 4 or 5 weeks later, we get the big move, and this was 1,000% move in a gold trade for us. When's the last time, raise your hand if you've ever made 1,000% in a gold trade. This is the first time I've ever seen it in 16 years. I've never, ever in my life seen somebody make 1,000% gold. 16 years next year in front of screens, trading these stupid fucking patterns over and over. 1,000% move. What did we just do a couple of days ago? We opened like a week and a half ago now? 2 weeks? We opened a new tranche. What did we just do today, folks, in TTI? We sold the double. We got the gap up. Fifth tranche, every single one completely risk-free and continuing to ride the trend higher. I mean, we just sold the double today, right before getting on. Here's the last entry that we just put on. You can read it. There are a lot of people that we'll sit here and we'll see in a second in another trade to say, I don't want to get into this trade because it's too far gone off the base. And I'm not here to tell you that's wrong. I understand that. There are certain traders that specifically look for base breakouts and they only want to be involved from that particular base. And that's okay. But I think they're lacking, personally, a very crucial part of the trading experience, and that's catching a ride along an uptrend that's already been established. So, a lot of these guys that like bases, they're privy to Stan Weinstein and his stage analysis. Well, even he tells you, listen, if you miss a breakout from a stage 1 into a stage 2, you can still play the markup period, right? You can still play the stage 2 uptrend. We do that through consolidation fractals, but you can do it a million different ways. Pullbacks to moving averages that matter, 200-day, 50-day, whatever you want to use, anything. Try to add exposure into those strong uptrends. And so that's what we did. We added exposure into the consolidation fractal. We waited, opened it November 10th. It's now December 12th, so it took a month to sell the double, but here we go. And again, we bought more exposure. Eventually, folks, this is not going to work. We're going to buy 3 to 6 months out or whatever. As you can tell, we were originally buying 12 months out. We've shortened that as we've gone along the trend, right? I think it's unrealistic to think gold's going to continue to run like it has over the next, 3 years. It could, and we'll make money, but we've shortened the expiration a little bit. So now targeting about 6 or 7 months out instead of 12. And we were just able to, sell it. So gold has been one of our most consistent winners since opening our first position back in March of 2024. We've been able to successfully add into this trade during each pullback and subsequent consolidation fractal, profiting immensely from the continued breakouts into new highs. It's time to add a new tranche of gold into our portfolios, targeting deep into next year while taking advantage of a deeply discounted options chain. Again, I'm very, very consistent. I like what I like. There's edge there. Not all of these are going to work all of the time, but that's not the point of this. This webinar is about the ones that do work, folks. We're getting a hell of a deal on these as they traded as high as nearly $21 a contract 3 weeks ago. And we bought them for $7.75. $21 to $7.75. Someone do the math. Find the discounts. Own the discounts. There you go. That's me. Not 1,000%, but still. I would have never told you this would have fucking happened in gold. And there you go. Let's talk about silver. I think this is a great opportunity to point out something that didn't work. So before anybody, all he's doing is talking about the winners. That's the point. You're on a webinar labeled the 10 best trades of 2025. There's plenty of folks out there that are going to talk through their losses. You can go listen to those as well. If you're in TTI, we take losses, but I'll highlight one of them here. Silver. Put back into the mind of where we were March, April, May of 2024. Gold was breaking out. We'd just taken a position in gold and it was working. Now silver broke out a couple of weeks later. Is this not the same goddamn setup as gold? Yeah. So what do we do? Well, follow the POP framework. Buy the breakout. Buy it above 27. Price target 33.50 and beyond. Riding an upward sloping 200-day moving average. Breaking out of a multi-year base. Bullish momentum regime. Precious metals were ripping. So what do you think we did? We bought it. Here it was. March 5th of 2025, we bought this. Or no, this was the next one. Excuse me. I guess I didn't show you the first one, but this trade didn't work. It was a dud. We lost the entirety of what we put on it. The options zeroed out. Now, I want to point something out before we get into the next one that did work. You cannot lose enthusiasm if you put on a trade and it doesn't work, if the setup remains valid. So let me go to the next one. We lost the first trade in silver. Some people just take that shit to heart. And I'm going to tell you right now, if that's you, you're going to get chewed up and spit out in this market. You got to fucking pick yourself up and move on to the next trade idea, even if it's the same one, if the setup's available, and attack it with the same vigor and conviction you did with the first one. Things are not going to work 100% of the time. Most things won't work 50% of the time if you know what you're doing. Silver, almost a year later, we get this massive consolidation fractal, which we bought into, and then it went sideways and we lost everything. So we said, listen, okay, setup is still valid. We've built this beautiful base on top of a previous resistance area. That's good. Now we're waiting for the trigger to get long. We want the resumation of the uptrend. So we waited almost a year. Again, can you wait? Are you able to sit there and stock a position for almost a year? We did. And as you'll see, that was the right idea. Long above 29, a very tight stop below 27.50, 33.5, 36.5. First entry into silver, playing the September 19th $31 calls. By the way, look at the date that we opened these. What was going on? March 5th of 2025. The world was fucking ending for those of you that weren't there. You had some of the biggest FinTwit creators go on vacation. I mean, it was chaos. From February through April, the market got crushed. Liberation Day, DeepSeek, etc. We're no different, by the way. We had positions on that got crushed with it. But the difference is when you're actually managing money, you can't stick your hand in the dirt, and run away. You got to manage it. You got to close out. You got to, put a Band-Aid on, do whatever you need to do to survive the drawdown. So when the market finds its way back up again, you have money in the account to participate. And so that's what we were doing. We were stopping the hemorrhaging and looking for uncorrelated assets that were outperforming the market, relative strength. And one of them was silver. Now, we were already long gold. We were already long gold miners. The KGC position we had put on in January of this year. Here we are, silver. Gold's made a historic run over the last year, breaking into new all-time highs and making a run at the 3,000 area. It's funny because now it's like 4,000, right? Silver tends to lag behind gold, and given current market flows and silver's constructive base built on top of a previous cycle high at 27, we're going to throw a position on with an anticipation of a catch-up trade. Again, very consistent, folks. TA does not have to be incredibly difficult from a pattern standpoint. It's the bigger idea. From an option standpoint, I want to buy the September 19th, 2025 $31 calls for no more than $215. And I'm sure, as you're well aware now, look at that. So this is where we originally added our first tranche, and the market went fucking nowhere. It was a complete loss. Again, if that bothers you, it's going to kill you. You have to be able to pick up your bootstraps and move on. What happened when silver finally started going? As you just saw, we said, let's go. Time to go. And we did. Added second tranche, sold the double. This is a weekly chart. Added third tranche, sold the double. Added the fourth tranche just a couple of weeks ago, sold the double like with 3 days later. We're in 3 tranches of silver, or have had 3 tranches of silver this year alone. All of them massive wins. Massive wins. We've taken profits, obviously, on the way up. I didn't add it here. But it always starts with selling the double, covering your ass, removing the risk, and then putting it back in at the right areas. So this is a weekly chart. So each candlestick, again, is a week. This was about a 6-week consolidation fractal, sideways. And then it rebroke out and we added. Cool, sell the double, hit a price target, etc. Came up and tapped 47. Seems like a pretty logical place to find some resistance, right? Right up there into all-time highs. You go back even further, it was here in the 80s as well. So this is a very important sticky level at 47. We took profits. And then we waited. And waited. And waited. And waited. And for those of you in TTI, give me my props. We waited and bought it at the exact right time. Because silver was on a historic run and people go, why the fuck are we waiting? Wait. Let's wait for the contracts to come down a little bit in value. We'll catch it on the way back up and we'll pay less than if we just buy right now. And we did. We added the fourth tranche, sold the double. Just a couple of days later, we got this. This doesn't happen very often, but on Twitter, I said, hey, listen, this trade probably you should put on right now. 5 hours later, we went from like 47 to 50 in a single day, and those contracts are up huge. That's on accident. I have no idea when things are going to go same day. But we had a position, we saw a position, things are going really well. So again, we're participating. For those of you in TTI and for those of you not and still owning silver, I want to give you a round of applause. The gold and silver trade are going to go down historically as some of the craziest moves in precious metals ever, and you own it. You're making money on it, but more importantly, I think it's just fucking cool. We own it. This will be talked about until the day we die. And we can tell our kids and our grandchildren and everybody else, we participated. Okay, here was that trade that we had just put on. The June 18th, 2026 $55 calls. They're so far in profit right now, it's insane. Along with gold, silver has been a great trade for us this year and appears to be moving higher after briefly consolidating over the last couple of weeks. I'm not necessarily worried about timing this perfectly. The bigger risk is missing the pivot higher and not being in a position to profit. I get paid a lot of money, folks, to tell people what you just read for free. The bigger risk is missing the pivot higher and not being in a position to profit. There's the pivot higher, 47 to 58 in like 3 weeks. How many other people were willing to buy that? Not many. I know people that were looking to short those. Don't short all-time highs. That's a bad idea. Eventually, there will be one that is the final top. Trying to find that is a fool's errand. Along with gold, we already own silver risk-free, so opening a new tranche here simply extends our exposure into next year. I have a sneaky feeling silver will outperform gold here over the next 6 months. Why? 2 reasons. Gold's already up in all-time highs. Silver was just now breaking out, and silver's a higher beta asset. There's no, I don't have to gatekeep that. So far, I'm right. So far, I'm right about that. Silver has absolutely outperformed gold, but gold's having a good day. At least it was before we went live. So take all of this, those 2 trades in particular, and I hope you guys burn those ideas into your brain. Don't be afraid to own strength, okay? This was our latest tranche there. Arvin, shout out. Arvin's our resident metals guy. He loves this shit. Shout out Arvin. That was our most recent tranche that we sold for a double. Let's talk about Google. I only got about 2 more charts, I think, 3 more charts. We'll get through this relatively quickly. I don't want to last too much longer than an hour. Google was a fun trade, is a fun trade for us. We opened this up in the summertime. So again, I want to point out that in the summertime, things were ripping. But Mag 7 was actually underperforming. So for those of you in the newsletter, if you're not, go sign up for the newsletter, folks. profitsoverprofits.com. Go to the link on my Twitter. It's free. I send out a daily newsletter. And what did I just send out like 2 days ago? Yesterday? Market breadth is one of the worst things you can use for confirmation bias. It's terrible. Most people don't use it right. It clearly defines an environment, and it should kind of steer where your capital is being risked at. What does that mean? In the middle of summer, it made you more money being long shit stocks like RGTI, right? Like QBTS, QUBT, OCLO, like the high beta spec shit stock. That was where the action was. And so a majority of our focus was on that area. That's where all the money was being made. But one thing we do in TTI is we take the profits from the short-term trades and we put them into longer-term trades. We take the profits from the short-term trades and we put them into the longer-term trades. Do I think Rigetti quantum computing stock is going to be the next big thing in 5 years? I have no fucking idea. But I would be less willing to bet on that than Google. I think Google will be up there in the next 5 years. So we took a lot of that short-term profit we made in late April through the middle of June or middle of July, and we rolled it into some of these Mag 7 stocks. And Google was one of them. So here's the setup. And this was not a very, very loved chart at the time. I didn't really love it either, to be quite frank. But it hit all of our things that we were looking for within the POP framework. Uptrend above an upward sloping 2-day moving average, pressing up into new highs, bullish momentum regime had just started, and it was outperforming on a relative basis. Now, to put things into perspective, we had just come through, or we were just going through earnings. So here's the actual setup above 193.75, risk off below 170, price target originally at 260. We bought January's. Again, if you're buying a long-term trade, don't buy weeklies or monthlies. Go out there. Sell the double and let the trend pay you. I said we're halfway through Mag 7 earnings reports, and so far the market has liked what it's seen. Goog initially responded well and has since consolidated sideways underneath its all-time highs. An opportunity for us to position ourselves prior to the breakout. With trends up and bullish momentum holding, let's grab Google above 193.75 with a stop out. This is like a kind of bread and butter setup. Now, I'll be the first to tell you, I didn't think Google was going to be the big winner this year, which I don't know if it is today, but as of earlier this week, Google is the best performing Mag 7 stock this year. By the way, only 2 of the Mag 7 stocks this year have outperformed the S&P 500, NVIDIA and Google. All of the other ones, Tesla, Meta, Amazon, etc., underperforming SPY. Fun fact. I did not expect Google to rip through the end of the year any more than the rest of them. This is one of the few Mag 7 stocks that hasn't necessarily been hit with outrageous premium increases. Again, this is not my bias for the stock. I don't care. I'm not a Google fanboy any more than anybody else is. But what I liked about Google was that it was cheap. It was cheap. Meta, Microsoft, NVIDIA at the time, the contracts were up 100, 200% over a week. Google was not. If you're trading options, you have to look at how much you're paying for the option. You have to. I'm not going through the stress about the perfect entry. I just want in and I want exposure through the end of the year. What happened with Google? Boom, boom. Had no idea. Did anywhere in that commentary, did it say Google is going to outperform NVIDIA because TPUs are greater than GPUs? No, there's plenty of those assholes on Twitter. I do not care at all. I care about trend, relative strength, and momentum. Google had all three. We entered it. We entered the first tranche as it was basing to break out. We sold the double on a big gap up. We took profits at the predefined profit targets. And we're looking, by the way, to re-enter. But I'm sure this is a daily chart. You're probably thinking, well, if you're looking to re-enter, where are you going to re-enter? I'll tell you, we're going to re-enter after some sort of either consolidation fractal or a pullback to what? Get a better entry on the contracts. This is an uptrend you don't want to not participate in. But you got to do it logically if you're using an options contract to do so. Because if you pay 100% more than the guy that just bought it the day before, you're at a disadvantage. Huge win on Google. Huge win. There you go. Almost 2,000%. Shout out, Alan. Sell the double, take profits, and then let these things go. You have what, 30 something more days? And we're actively looking to grab some more. So we'll see if we can do that. Micron. Semiconductors are obviously, particularly this cycle, but they're the most important industry group in the market. They are. They represent the highest beta tech area, and this particular cycle and most over the last 15 years at least have been driven by tech. So we're constantly looking at, in risk-on environments, which we define using our top-down process. If you think about how much time it spends to find a trade and put it on, 50% of that time is building the bigger picture. It's not even talking about the chart. 50% is like, are we buying or selling here? And if we're buying, what are we buying? Which areas of the market? That's half the work. 15% is scanning to find the feasible trading vehicle. 10% or 15% is the chart, defining entry, stop, take profits, and then the last 5 or 10% is the options chain. Half of it is defining the bigger picture first. So Micron, we're thinking to ourselves, we need more semi exposure. Middle of summer, things are starting to chip back up. Again, I have DDR5 RAM sitting right next to me right now, unopened, if anybody wants to buy it. I had no idea, nobody in TTI knew that RAM was all of a sudden going to be the next big thing. And apparently Micron makes RAM, or at least part of it. I don't know, memory in general. For me, I look at this as it broke above 125. It was building a nice little base here. Let's own it. Bullish momentum regime. There's no 200-day moving average on the chart, but it's sloping up. Let's go and look at the actual trade. There it is. Risk on above 126, right? January, we went out. Rotation within the semiconductor industry offers new opportunities at opening exposure through the back half of the year. Following AVGO's earnings, MU gapped up and over a crucial zone at 126 with an opportunity at an all-time high push. Again, does anything there lead you to believe that I knew RAM was going to be the next most valuable thing in this AI bubble? Like, no. Trend, relative strength, and momentum. We have price targets up there, and lo and behold, I'm sure you guys are aware, Micron went absolutely insane. None of this is predictive. I'm not claiming to be the smartest guy in the world. I think my smarts come from the fact that I know I'm not the smartest guy in the world, and I don't need to be to make money. I think that matters more. Entered the first tranche, sold the double, took profit. We still have some exposure there. We're actually looking at potentially adding more, but right now the options contracts are just absolutely too juiced. It's very, very high risk here. So I think we're just going to continue to let this thing either build the base out and then buy the rebreak, or if it pulls back, maybe try to buy a bounce off of a fib level, but we've not re-entered. We're just riding this higher. Okay. And there's Brian. One tranche was worth over 50,000%, or 5,000, excuse me. I want to point something out here. inside of TTI, we come up with these trade ideas and we send them out to people, which is great. But then there's another level to this, the guys inside of Discord, where we sit in voice chat twice per day and we talk through trade ideas. And these guys really epitomize the ideas of the POP framework and what we do in TTI. And so, for example, Brian went out and bought some Novembers. He said, I love this. Brian's been with us for 3 years. I trust Brian. He knows what he's doing. So while some people have the Januaries, other people do what they want to do. We're all trading the same group of stocks. It makes it very easy as a team to talk through this stuff when everybody's trading the same stuff. So shout out Brian on the November 30 contracts. One of them worth 5,000%. Last one, I think. General Motors. Got 5 minutes to go through this. I think this is the last one. This is not necessarily the biggest trade we've ever made, but I think it defines kind of, or at least it answers a problem that a lot of traders have. We bought the 67 area breakout. This is what it looked like when we owned it. What happened after we bought the 67 area breakout? Rising above an upward sloping 200 moving average, bullish momentum regime. Consumer discretionary has not been the best sector all year, and General Motors was outperforming it. So relative strength on a sector basis. Here was the alert. Went out October 23rd. We bought the January $75 calls, and it took forever to sell the double. Forever. It was frustrating. General Motors just had its best earnings reaction ever and subsequently gapped up into up into its previous all-time highs, right up into that area up there. Trading above its upward sloping 200-day moving average, within a bullish momentum regime and pressing into big blue skies. Let's buy GM here as long as it's trading above 67 with a stop out on a close below 61.5. Now, what made General Motors not an easy trade was that we broke out and initially got the thrust. We go, this is going to be great. It's General Motors, folks. I tried buying General Motors back here in early 2024 and got smoked, just like silver went sideways, which is funny, by the way. Here's a clever way people on YouTube and Twitter lie. Hey, folks, I bought the base breakout and look how much it's up. But if they're trading options, very likely it zeroed out. Like me. Chart looks great. Trends up, higher highs and higher lows. Options contract zeroed out. Took way too much fucking time. Think about that next time someone's posting something on Twitter and you're like, I don't know about that. But we bought it again. And then it pulled back. And then it bounced. And then it pulled back again. The contracts were down like 60%. Trade idea was still valid. We said above 67, you got to be long. But for 5 or 6 weeks, we watched this thing bounce around. And we had internal conversations. What are we going to do with this? Do you want to cut it? Is it not working? Well, it's above 67. The RSI is staying above the 50. 200-day moving average is still sloped up. I think we got to give this thing the benefit of the doubt until it confirms a breakdown. And it never did. So market was pulling back. GM was essentially going sideways, holding its key breakout level. That's relative strength. A couple of days after the November 20th low, we sold the double, and we just took profits yesterday, I believe, or 2 days ago. Now, I do want to point out that we bought Januaries, and we bought these back in October. So here's the initial issue. And this is why, trading is discretionary. We had price targets at 92 and 105 when we opened the trade itself. But if you're trading options, folks, there's an expiration at the end of that. You have to be dynamic with what you're trying to do, which is why we send out alerts in TTI. When we're changing price targets due to expiration, you got to know why. You got to know where. So we sent out an alert, said, listen, we don't have enough time here to wait for these original price targets to hit. This is a winning trade. Let's take some off. Let's just take some off here. So we redirected our price targets to $80 and I believe 87.5. So drastically bringing these down from 90 and 100 to 80 and 87. In a perfect world, we would have bought more time, or General Motors would have not pulled back twice, but because it did, it crushed the premium on those. And so while this isn't the biggest win, I think it clearly defines one of the most classic issues that traders have, but more so with people that trade options. Don't close your trades just because they don't go up 500% every day, particularly if you buy time. If you're a swing trader, it's part of the business, folks. Time is on your side. You got to let these things breathe. Draw a line in the sand where it invalidates your trade idea and stick with it until it invalidates your trade idea. Sometimes that means those contracts will go to zero. If that makes you uncomfortable, put less size in them. Your stop loss is your premium paid. Your stop loss is your premium paid. Okay? I think that's the last one. I lied. Jesus Christ. One more. Really quick. IREN. I don't even think I have a trade idea listed on this. We took this in a live webinar together. We entered the first tranche. We sold the double. We took profits on the way up. This was an insane move. This was a crypto miner when we opened it, and then it turned into an AI cloud provider. Imagine that. Like the company pivoted business models after we already opened it. Sure, whatever. There you go. I mean, it's classic POP. What did we do after we took profits? We removed the guardrails. What do we do when we remove the guardrails? We let it do whatever it wants to do, 3,000%. Chris, you're the man. You're the only one that stuck with it this long, by the way. I did not. Shout out Chris. Big win there on IREN. Okay. I think that might be the end of the slides. Let me see here really quick. Yeah. Okay, really quick. If you're interested in what we're doing, if what we're doing in here makes sense to you, you don't want to day trade, you don't want to intraday trade, I encourage you to check us out. As a matter of fact, since you stuck around to the end, I don't ever do this, but we're throwing out a discount code to try to entice people to come into the funnel to get in here. Most of you will really love this. This is what it looks like. We just sold the double. We just sold the double. We put out newsletters every day. We do these webinars twice per week, right? The one on Wednesday, we talk through our current positioning, current market, put on new trades together as a group. Very important. On Fridays, like today, we go through live webinars where we talk through different areas of the market. From a TA standpoint, we teach lessons. Why is primary trend important? How do you manage risk? How do you deep dive sectors? Things like we're doing right now where we're deep diving big wins. We put out trade alerts, the buys, the sells, the sell, the doubles, the take the profits. All of this stuff is there for you. So if you're the type of person that's working full time, that doesn't want to sit there, doesn't have the time to sit there and manage a portfolio intraday like these crazy people are doing, and you think this stuff would help, feel free. I'll drop the link in chat, I think, or somebody else can. But if you use code BESTTRADES coupon, I'll give you 25% off your first month. Try it. You don't like it, leave, no harm, no foul. But I guarantee you, a bunch of you are going to really like this. The way that we've built this has been very beneficial to people over the last 6 years. So that's my sales pitch. I'm not really good at selling. But I guarantee you that if you try it for a month, most of you are going to stick around. Okay, let's go back here. Any questions about specific trades that we talked through? There's a little bit of a lag on stream, so I'll wait here about, 30 seconds or so. If there's any questions, feel free. And have one of my minions post the link to join. It already has the coupon code applied. So if you're interested, check it out. I love when there's no questions. That's great. That means I get to go eat lunch. Folks, it's 1:45 p.m. where I'm at. I'm in southern Brazil. I'm starving. My wife made lunch an hour ago, so I'm going to go eat that. Okay, I think we had somebody posting it in chat. Cool. That's awesome. Okay, that's what I got for you folks. My name is Hamilton. I represent the Trading Initiative. If you just paid for monthly a couple hours ago, I will do you a favor. Message me on Circle We'll have a quick little 10 to 15 minute powwow. I'll make it worth your time. It's cool. I'm a nice guy. For the rest of you folks, I appreciate you hanging out. Hopefully you learned something. For those of you watching this later, inside of TTI, if you have any questions, feel free to leave a comment below once I post this on the market research portal, and I'll go through them. Okay?